All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Banks leading the way higher here this morning as we see some strength in tech, a little bit of strength in banks, helping to push the market up a little bit here. Healthcare continuing its strong run here overall, but we can see here on the chart of S&P futures. We have the market all week just in this very flat range, and then yesterday afternoon, we saw it break to the upside. And this morning's just that kind of continuation of that upside break. What's interesting about it is that this is kind of the first time in a while where we're seeing most of the action happening during the U.S. markets while global markets are closed. And, we saw that rally yesterday afternoon. We're seeing the rally now. It's U.S. driven, not driven, foreign stocks and global stocks driving it right now. So a fairly strong move here for things, and the bulls just continue to run. And they're not running in every stock. It's not like you can go out and buy anything and it's going to go up. In fact, that's anything but the case. I guess unless you're talking about Micron or something like that. But in general, still very solid in the Bulls' favor here. I titled this video "Drunken Holiday Sentiments?" question mark. Let's go look at the numbers. And so we'll go take a look at some of the metrics behind this. But before we do, today is the last day of the challenge, and holding on to one position, GLD, it's up 4 cents right now. So it's not gonna, it's not like it's going to make a big difference in the final challenge result, but I will pull it off at the close here today, and finalize the challenge spreadsheet and everything there. As we go forward, we'll talk about some of the metrics, some of the data. It started with some things yesterday. We took a look at if the algorithm is finding trend or not, the reality is it's finding trend. It's finding trend at a very good pace, but unfortunately, with our trades this challenge, the ATR method hasn't captured them as well as it captured them last challenge, we know there's going to be some variance there, and part of the game. But holding on to the GLD, and we'll pull it here into the close. I was asked if I have a personal gold position, and the answer is yes, I do. I have been building it here this week, but long term, personal gold position there, and I still have some more to build there with it. But you know me, I'm rather bullish on gold and the outlook for gold through next year, the year after, and it has nothing to do with anything bearish sentiments on the market. It's not like, oh, I'm bullish gold, so I'm bearish on the market or anything like that. Don't read any of that into it. It's just when you look technically at what's been going on with gold on a monthly, weekly, daily basis, to me, it's just a nice time to start building a position there on it. Okay. All right, so let's go take a look at some of the numbers behind, what has been this rally. And, rallies are always interesting. Bull markets are always interesting, especially from trader perspectives, because they always look so easy to run with and so easy to, in hindsight, look at and go, well, that was, of course, blah, it's going up, duh. But in the throes of it, that's not always the case, right? When you think of how many gaps and how many news events around the trade war had to drive this, and the earnings season behind a lot of these moves, it's it's never as easy as it looks in hindsight. But it has been a very strong rally, and it is continuing, with that strength. Now, what about the sentiments, right? are just sentiments out of control, right? There's always that phrase in the market: "What goes up has to go down," and it's an absolutely false phrase, right? There's absolutely no factual basis behind it because we see stocks continue to go up, 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 up. Apple traded at $2 when Steve Jobs sold a bunch of his shares, right? Has it pulled back? No, right? And so we could be at a period in the market where we never see it, go lower than this level. That's always a possibility, right? But markets tend to, be driven with the ebbs and flows, tend to ride on emotion, right? These emotional sentiments from investors. And, can we capture some of that? Can we look at some of that? Well, there are many metrics that people have put together that try to look at sentiments, that try to look at bullish bearish ratios, that try to look at the health of a rally and overbought, oversold, trying to look at the next direction. Right. One of my favorite indicators to look at, and we've looked at this many times, is the AAII, American Association of Individual Investors, and the survey that they do. And the survey for this week, right, came out Wednesday. I looked at, takes a look at what members feel will be the direction of the stock market over the next 6 months. And you can see that bullish is about 38% historical average. So on average, you have about 38% of people that are bullish. Well, right now it's 44%. Wow, okay. Neutral. Average is 31.5. Right now it's 35.4. So we have a lot more bullish and neutral than normal. Bearish, typically 30%. Down here at 20%. If you're a contrarian, right? If you're a contrarian, you look at this and go, "Oh, the market's got to reverse. It's got to go down. It's got to, get back to the norms." If you're a big kind of trend rider and go, "Hey, follow the crowd knows what's going on. The crowd, it tends to be right in the short run." You look at this and you're buy, right? Whichever mindset you take with data like this, whether you're contrarian or follow the crowd, you definitely have something to react to. You have something to look at and sink your teeth into. So let's go take a look. One of the things we can do, and I'm just going to type it into the stock chart search. I'm just going to type in sentiment. And it's going to bring up some sentiment indicators. Okay. Now, I want to chart this AAII sentiment survey here. And we have two. We have the bullish one, and we have the bearish one. Let's start with the bearish one. They're both going to show us the same, something similar. And this is what it's going to look like. And I don't know about you, but that's difficult to read. So let's clear out all of our indicators. And then that still becomes difficult to read. So let's come in and change our type of chart. And we'll adjust this to a line chart here. Just go with a solid line. And there we go. All right. We can see that the bearish reading is 20.5. That matches the 20.5 that we saw right here on the AAI website. Okay, so it's pulling this data and charting it. Now what we can do is we can overlay the market. And we can say, hey, okay, let's take a look at past history and, what the market has done when it's been in a position where only 20% of the market participants are bearish. Okay? Let's chart it. So here we go. We had 20% right back here in the end of February, beginning of March, 20% here in April, 20% here at the beginning of May. What happened? Well, we had a little bit of pullback at the beginning of March, right? We didn't have some big bad rollover or anything like that. Here in April, we saw markets just kind of continue to drift on higher, right? Here in May, all right, now we saw a turnabout and, a significant correction come in. So we have three times where it's been, here around 20%, and we have three different scenarios that played out. One was just kind of a flat to slightly lower, kind of stale. The other was continue to go higher, and the other was a pullback, right? Can we look at that and go, well, there's something definite here and something to, really say, that what's going to happen right here? No, there's not, right? This doesn't give the contrarians anything. It doesn't give the, the trend runners anything. So let's go back in time a little bit. Let's change this here to a weekly chart and see if we get anything. So this is going to give us about 1, 2, 3, 4, 5, 6 years, almost 6 years worth of data, and you can see that we have these ebbs and flows here between 20% and 50%, right? And let's just take a look at the high side, right? Let's just take a look at when the market is extremely bearish, right? When it starts to get up here almost to the 50 level, right? And so we'll just mark these levels here. There's a few of them. There we go. And then, we'll scroll down, take a look at what happened to the market. Notice that we get that super bearish here in January of 2015. Market bottom off and rolling. Here in 2017, we got that kind of super bearish, and the market kind of flat, flat afterwards. And it was interesting to see the sentiments turn bearish there, even on a market rally. But when the sentiments have turned bearish on pullbacks, it's a different story. Here we have a pullback in 2018. Sentiments get super bearish. What's the result afterwards, right? And here we have in 2019, sentiments become quite bearish. We get a little more sell, but it's been pretty much all buy since. When I look at sentiment indicators, one of the things that stands out each and every time with almost every sentiment indicator is that when you look at bearish extremes, meaning pullbacks in the market, and then you look at sentiments, it's easier to be contrarian. But when markets are going up and investors get more and more bullish, it's a lot more difficult to be contrarian. And let me show you what I mean. Let's take a look at these times where the bearishness is very light, very low, right? We have right here. Let's just go, these times where it's under 20%, okay? And let me just mark these. Get right here. Go right here, right here. Okay. There's most of them, right? So what do we see happen? Well, here the bearishness is really low, and the market continues to go up. Yep, there's a bad day or two. Here the bearishness is very low. Market pulls back just slightly. Here the bearishness is very low, and the market dead flat. Very low bearishness here at the end of 2015, and we get some pullback. Very low bearishness here at the beginning of 2018, and the market rallies. Same thing here in May of 2018. We get very low bearishness here in 2019, and the market continues to rally. And then we get low bearishness, and the market pulls back. Right now, we have low bearishness. Can we look at the past and say, well, this is going to be a pullback or a rally off? No, we can't, right? There's not enough. We could talk in theory about contrarian and everybody's bullish and, if something happens, it'll change the tide. But that's all we could say. That if there's a catalyst and there's a catalyst to switch people's mindset from bullish to bearish, yeah, we could see something significant. But it's going to need a catalyst. Without a catalyst, we could see things just carry on, continue to go higher. One of the things here about May that we saw is there was a catalyst, right? What was the catalyst? Well, the catalyst was the talk of, hey, stalemate in trade talks between the U.S. and China. That was a catalyst. But when it comes to this kind of overly bullish, right? We could say right now we're looking at the overly bullish period or underly bearish period. Very difficult to look at the numbers and go, well, you know what, let's just be contrarian because of this. When it's on the other side, when the market is bearish, overly bearish, it's a lot easier to look at the numbers and be contrarian, with those numbers. Okay, so anyway, that's where the market is. Is it, is it drunk on over holiday sentiments, overly bullish holiday sentiments? Sure is. It absolutely is. But does that mean it has to pull back? No, it doesn't. What does it mean? It means that if there is a catalyst, we could see something pretty strong. Now, some people believe that just going into the end of the year is going to be a catalyst. That investors are going to be forced to sell. Some people believe that the beginning of next year is going to be a catalyst for one reason or another. But so far, let's face it, we haven't seen a catalyst. We haven't seen something, come in that we can call a catalyst, and so it remains kind of all aboard bears, or excuse me, all aboard bulls. Regardless of this sentiment element. You see me pull this up a lot, but I think it goes well with the sentiment indicator. Okay, to filter out some of these levels where different things are happening, and to say, well, right now we could see a sentiment shift and you go bearish, the markets go bearish. This indicator is going to be lagging. It's not going to show you very quickly. But one that is a bullish percent index. And if you start looking at the bullish percent index, and you start seeing the bullish percent index pulling on back while sentiments are overly bullish, yeah, your contrarian is probably good to go and probably good to play it. But what do we see right now? Bullish percent index continues to improve, and so there's no real confirmation that, things are overly bullish, right? And that is what we see. But if we were seeing the bullish percent index pull back with sentiments where they are right now, yeah, I'd be out there kind of loading up on puts. And, frankly, that's just not something I can do right now, in the conditions that things are at. Okay. So hopefully that kind of just helps to take a look at and capture some of that sentiment element, and kind of understand when change in sentiment, matters and when it doesn't. And oftentimes when you get to one of the extremes, you'll get a reversal, but it's very difficult to time that up. The bullish percent index can help to time that up. And right now, you go, okay, it's overly bullish. Great. When is that going to end? Well, keep an eye on the bullish percent index, and it'll likely, it's not going to be a leading indicator, but it'll likely give you confirmation that, okay, now the switch is on. And frankly, the switch right now, it's not on. And, we continue to see the bulls, charging here. All right. Last thing, the schedule for the rest of the year has been posted into the message feed. Go ahead and check that out. I am ending the challenge here this afternoon. And then next Thursday, I will be on for a day trade training. We're going to do a couple trainings on Thursday and on Friday. And then on, to close out the year on Monday and Tuesday, I'm going to do some live day trading sessions. Now, alerts are not going to be sent out for the trades. It's not going to be in a challenge format or anything else like that. It'll be day trading what that market is right then. And we'll kind of be online for, an hour and a half doing that in the morning. Longer if needed. Just depends on the market, right? Just depends on the market and what the market gives us. But when we look at the day trade strategies, we're going to look at,
different strategies for different markets, and then on Monday and Tuesday we'll assess the market and go, okay, which strategy do we apply, and we'll run there. And then New Year's market will be closed for New Year's holiday, and then on the 2nd I won't be on video in the morning, but I will be on in the afternoon, and yeah, we'll kick off the next challenge and be off and rolling. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later. Take care.